Hello traders, Gary Wagner here. Just about 10:45 in Honolulu, 4:45 in New York. It is Monday, 17th day of September 2018, and this is the Daily Report for Gold and Silver. We are on the cusp of some announcement coming from the White House in regards to whether or not they're going to impose an additional $200 billion in tariffs. But for now, we do have a weak U.S. dollar, which is highly supportive of gold prices. Gold futures currently up about $4.40 on the day, $1,205.60. That's our current print, plus $4.50 on the day. Silver also tracking higher, up about 6 cents at $14.20. Palladium gaining about 0.75% at $977.40, and platinum trailing but up $1.50 at $800 per ounce. As we said, it has been dollar weakness that has been pretty much the entire move in gold today. I would say about 80% of the move is based on dollar weakness. Dollar trading down by about 0.4%, a net decline of 42 points at 94.08. In terms of the equities markets, they were mildly lower today, a 92-point drop in the Dow, 26,062. S&P losing about 0.5% at 28.88. Traders, after dropping by about $10 on Friday, we have gained half of that back in terms of gold pricing today, currently back above 1,200 at $1,205.70, a net gain of about $4.60 on the day. Now, traders are awaiting news from the current administration as to whether or not we will see an additional $200 billion of tariffs imposed at approximately 10% for these goods. What we can see in terms of recent activity is we have gold moving into a highly congested area. The congested area has definitive resistance just above, call it 1217 to 1218. That is a 0.618% retracement. And at 1178, that's major support. But we have our first level of support, which is coming in at roughly 1190. So what we have seen is, in essence, a $20 range in which gold is trading on the highs to about 1218 and on the lows to about 1190. Until we see the market break above 1217 or break below 790, we could see a continuated sideways and congested trading pattern as fundamental news emerges affecting the markets. And traders, on a weekly chart, we can definitely see the effect of the current trade dispute, as we can see in terms of the lows, a series of higher lows to a great extent, and to the same extent, a series of lower highs. We absolutely have this market compressing in range. Last week had a pretty dynamic range, however, it closed pretty much exactly at its opening price. This, of course, is only Monday's candle right here, so it will take time for this to develop. However, we have seen some weakness in the U.S. dollar, in which we can see the dollar is now tracking very close to 94.08. That is a net decline of about 42 points on the day, or 0.45%. My sense is that we could, in fact, see some real support come into the dollar. This is where we have earmarked our support level. This is a 0.38% retracement. That comes in at 93.96. So we're just a couple of ticks away from that. We are currently looking at real resistance coming just above 95, so just shy of 96. We have seen this market, aside from this one major clip to the upside, trading within that range for the better part of the last 4 months. Which takes me to my short and long-term forecast in terms of gold pricing as well as the dollar index. My sense is, as in the short term, we have seen the potential of a trade war be highly supportive of the dollar and thereby putting tremendous pressure on gold. I believe at some point that is going to switch, and if this trade dispute morphs into a full-blown trade war and the implications of that really become felt by both sides of the fence, so to speak, we we will see the reverse happen, in which we will see gold return as a safe haven asset and the dollar begin to sell off and show some signs of weakness, which is why I am looking to exit our current short trade. I'd like to do that at least with a little bit of profit. So we will await the announcement by the White House, because I expect a reaction with gold going lower and the dollar moving higher if in fact the administration announces that they are going to impose additional tariffs. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.